Why is it that PAs are so consistently left out of the wealth building conversation? If you are at work, in the hospital or the clinic, and you hear someone talking about investing, creating assets, building wealth, and you're a PA, do you identify in that circle, join in the conversation, feel empowered to be there? Or do you sit on the sidelines, listening quietly and wondering if any of that stuff is applicable to you because you're not a physician? If you have ever wondered if building wealth is possible for a PA, this video is for you. I have been a PA since 2016. I've spent the last decade doing critical care and cardiology and, frankly, really loving medicine, but almost more loving the process of figuring out personal finance, building wealth for myself, and figuring out how to create something that would pass on to generations beyond me. I crossed the millionaire mark at 31, and now as the founder of Millionaires in Medicine, I help empower other medical professionals, especially PAs like myself, learn how to master their money. And to be frank, for the last decade that I've been a clinician, I've gotten a little bit tired of the landscape of what's available in terms of personal finance education. When I was a brand new grad, it was nothing but Dave Ramsey or personal finance for physicians. Outside of that, there was nothing specific to any other type of medical professional. Fast forward years and years and years into the future to where we are now in 2026, and things aren't all that different. We have here the financially intelligent physician, the wealthy physician, the physician's guide to investing, the physician's financial blueprint, the physician's guide to investing, the physician philosopher's guide to personal finance, Financial Freedom RX. I'm running out of room over here. The Physician's Pocket Guide to Financial Independence. Physician Wealth Management Made Easy. The Physician's Path to True Wealth. Physician Personal Finance Made Easy. Dollars for Doctors. And The Physician Guide to Finance. Okay, all of these books are personal finance books written by physicians for physicians. So what is there for PAs? Because to be frank, there's a lot of us. Most recent data points to almost 200,000 PAs in the United States. While there are more physicians, right? There's over 600,000 physicians in the United States. We have a presence that's a third of the size, and yet nowhere near a third of the resources, right? In fact, up until now, we got absolutely nothing, which is exactly why I wrote the PA Millionaire Path, so that we can have a book that is specific to us. Because the path to income maximization does not look the same for a general surgeon as it does for a PA. The path to investing to build assets looks similar up to a point, and that point tends to end at the realm of stock bond investing, right? Once you get past that and you get into alternatives and other asset classes, various barriers to entry make things a little bit different for PAs, right? Most physicians are immediately accredited investors by income. And for PAs, sometimes it takes strategic negotiation or building your net worth outside of primary residence first in order to even qualify for the deals that many physicians have immediate access to. On top of that, student loan management looks different as well, right? If you are a physician and your plan is to spend the next 6 years becoming highly specialized in a residency and fellowship at an academic medical center, with a very low income at the beginning and this huge income ramp, public service loan forgiveness is an absolute no-brainer, right? It doesn't look like that for PAs. Our income path doesn't mirror that. And so even the nuance of student loans has to shift when you are a PA. And as I say all the time, if you don't have an income plan, a debt plan, and an investing plan, you don't have a money plan. So for all of us, we need something that's very specific to us that walks through each of those avenues, and that's exactly why I wrote the PA Millionaire Path. Now, there's 2 layers to the question of PAs at the wealth building table. The first is the layer of just practically, is it possible for us to become multimillionaires and to create generational wealth, right? That's a fair question. That is the strategy or the tactic behind it. But then there's this other layer. There's the identity layer, and that people skip over all of the time because it feels like fluffy, subjective. Is it even real? Does it even matter? But it turns out that quite literally, nothing matters more. Because if you do not believe yourself to be capable of doing those things, you will, of course, never do them. And so before we talk about straight math and numbers and what it looks like for a PA to build wealth versus a physician, let's first talk about, are you creating the identity within yourself as a PA that you are capable of doing this? I would first ask you this. Do you have the thought that your income doesn't place you in the category of people able to build wealth? Okay, raise your hand if you're a PA in the background and you've ever thought that. My suspicion after a decade of working with PAs and being friends with PAs is that 7 or 8 out of 10 folks raise their hand. That is an absolute lie. That is this weird world that we live in where we feel like making $130,000 a year or $150,000 a year is nothing because we walk next to people making $700,000 a year. And so we develop this idea of like, those people are the wealthy people. I'm over here in a different category. And so I don't have to worry about that stuff because it's not for me. Now, again, we're going to walk through math that just blatantly disproves it. But if you don't believe it, if you don't soak it up, if you don't feel it in your core that your income is enough for you to be comfortable as well as build wealth intentionally, the buck stops there, right? Like nothing else will go past that. For me, the idea of mentally leveling up always has 2 components. Maybe you'll relate to this, maybe you won't, but I've been in the game of self-improvement for a very long time. It's always 2 things that lead to the result. The first is in the gym, every time. Every season that I have where I just get into killer shape, right? Where I'm doing the long runs, where I'm training really, really hard, I'm always in incredible mental shape and I always have momentum. Take it for what it's worth. Maybe you're not a gym person, whatever. You do you, but I'm telling you from my lens, from where I sit, this idea of momentum, of feeling like forward progress has always started in the gym. Number 2 is it always then leads to who's in your circle. Okay, if you are a PA, I want you to think to yourself, when is the last time I talked to someone about income optimization, right? That was a PA like me. When is the last time I had that conversation? And you guys know what I mean, not the conversation where you sit around at work and you complain like, oh, they make so much more money than I do, or they really ought to give us more than a 3% raise. Not the grumbles, the real, like sit down and have a conversation with a friend that says, hey, look, this is my 5-year plan to increase my income by $50,000. What do you think? Okay, that was me at brunch last week with a PA who said, hey, I made a non-clinical transition. My income is higher. My bonus last year was $60,000, right? That was half of my clinical income from before. But I want a next step. I want career development from here. So here's my 5-year plan. Just hear me out. Give me your advice. Okay, those are level up friends. But even outside of the income piece, the next layer is, when have you actually had a conversation with a PA that invested in anything outside of a Roth IRA and a 401k, right? I'm not hating on those investment modalities. They're fine. They're important. But like there's levels to the game and that's playing at level 1. Okay, so when is the last time that you had a conversation with someone about any other type of wealth building? About someone who was buying long-term rentals, short-term rentals, mobile home parks, investing in private lending funds, doing anything else, right? When is the last time you had that conversation? Because your network determines your net worth in effect, right? It's a silly saying, but it's 1,000% true. I could name off the top of my head, if I said, hey, I'm really interested in XYZ asset class, I could name for probably at least 6 or 7 types of assets, someone off the top of my head that I know that is niched into that asset class. And if I don't know someone in the asset class I'm interested in, typically I'm only 2 to 3 text messages away from finding someone. But that's because I've built my network, which frankly is probably more valuable than anything else. And whether or not I ever invest in the asset class, the conversation makes me better. It makes me think about things differently. It gives me more opportunities instead of fewer. And it allows me to see like, wow, there's other people out there just like me, same income category as me, that are actually creating genuine financial independence. And they're crushing it with money. So if they can, then why can't I? Now, if your whole entire circle is people who invest in their 401k and Roth IRA, don't talk about income, don't talk about wealth building, think the idea of them becoming a millionaire is far-fetched and silly, well, then that's your future. You will also be the person that thinks that you being a millionaire is far-fetched and silly. I don't hang out with people like that. Honestly, I just can't, because I have to really be intentional about what I feed into my mind. And so if I'm going to have a real conversation with you where we get into the weeds and we're like not surface level, but really talking about life and development and growth, I need you to be challenging me to be better. Those types of relationships, those types of interactions, that is how you change your identity from being the PA who goes to work and goes home and feels like wealth is for someone else to someone who is out there doing the cool stuff. You can be the person doing the cool stuff. You need to change the level of momentum that you have. You need to change your network, and you need to invest in your education. One of my favorite sayings is that your education should precede your circumstances by 3 to 5 years. I did not make that up. And I can't recall where the heck I heard it first. Otherwise, I would absolutely cite the source. But if your education precedes your circumstances by 3 to 5 years, what does that mean you should be learning about right now? Maybe you're not an accredited investor, and so you're not ready to make your first passive play into a syndication as an LP. But if you don't know what those words mean today, are you going to be ready in 3 years when you are accredited? Now, before we move past the identity piece, I want to create the lens for you when we go into these numbers of what it looks like for a PA to create financial independence, that financial independence looks differently based on your lifestyle. Remember, that's what it is. Financial independence doesn't mean I'm rich AF and I can just buy anything I want whenever I want and that's it, right? That is not at all what financial independence is. It is a simple mathematical place where your assets can pay for your lifestyle indefinitely. And so as a PA, that will look differently with different numbers than if you're a BMT doc, okay? Unless you happen to have the exact same lifestyle expenses, which is unlikely. So when you're looking at this and you're like, well, I'll never have the exact number of millions that a physician could have because they earn more, that's fine. You don't need the same number of millions. You need to replace your lifestyle. So if you're a single PA and you live on $70,000 a year, you might be more than financially independent with $5 million. Once you factor in inflation and all sorts of other pieces as you decide, am I going to be living on this portfolio for 30 years or 50 years, the whole 9 yards? That might be your number, 5 million. That might be your number. But if you earn $700,000 a year as a subspecialized surgeon and your lifestyle costs you $400,000, $5 million doesn't create anything close to financial independence, right? It's easy to conceptualize with rental properties and just very simple like cash flow, okay? If you are a PA and you need $5,000 a month to say I'm financially independent, that would be pretty bare bones, but track with me. And you decide I'm going to do it with long-term rentals, okay? And each one cash flows $250 a month. Well, it is simple math to figure out how many long-term rentals you would need, right? 4 long-term rentals would create for you $1,000 in cash flow a month. If you want $5,000 in cash flow, you need 4 times 5. You would need 20 long-term rentals. Now, if your lifestyle costs $25,000 a month, you just need a lot more rentals, okay? You need a lot more capital to deploy because you have to have more down payments. But good news is you probably have a higher income in order to create the extra capital to have more rental properties. You see the difference? So it's not always an apples to apples comparison because financial independence is tailored to you, to your lifestyle expenses, and thus your income. Let's look at math. Let's look at what does it look like for a PA building wealth in medicine in 2 different subspecialties compared to the subspecialized physician. We'll start with dermatology, okay? The median dermatology salary per Merit Health for a PA is $156,000. Now, the starting age matters for all wealth building if you're doing stock bond investing because time in the market is really valuable. So the PA gets to start at 26. They're going to invest 20% of that gross income, and for simple math, we'll assume no raises. That dermatology PA, by age 50, they have $2.27 million invested. Hello, the PA is a multimillionaire, right? Earning a median income, albeit in one of the higher paying subspecialties for PAs. Now, what about the physician? Because the dermatologist is going to earn closer to $500,000, but their starting age will be later, right? We'll assume they start at 32. They also invest 20% of their income. They're going to land by age 50 with $4.1 million. Now, remember, yes, they have more millions, right? But their lifestyle probably costs more because they've been investing 20% of that $500,000, which means they've been living on a lot more money than the PA has, right? Even after you factor in taxes. And so either way, both of these people are multimillionaires, and both of them are well on their way to creating financial independence for themselves. Now, of course, you know me, I'm all about increasing income. So what happens if we're a really strategic PA? We only have that salary for year one. After that, we move to a productivity-based model with a percent of collections contract, and our income hits $250,000. This is very possible in dermatology, right? This honestly isn't even extraordinary. This is the nature of this specialty, that it consistently has opportunities for productivity-based contracts and always ranks as the highest paying subspecialty for PAs for a reason. So now we have a PA that earned the median salary for 1 year, but then they bumped up to $250K. When they invest 20% of that income by age 50, they end up with $3.4 million. Same starting age. You see, they've actually shrunk the gap quite a bit. The gap between the strategic PA and the dermatologist at this point in time ends up being only about $500,000. And it's simply because they managed to scoot that income up, but also have this nice early starting age because of the shorter training duration. Now, the purpose isn't to go, oh, physicians have more wealth or PAs have more wealth. Remember, it is unique to you. What you need to create financial independence with a $500,000 a year income is different than what you need to do it with a $250,000 a year income. All three of these examples result in multimillionaire status and someone who, again, is well on their way to creating financial independence. Now, you guys are all looking at me thinking, okay, great, Kristen, but dermatology pays great. I don't do dermatology. So, what about me, the family med PA, right? The notoriously lower paying subspecialty, but so incredibly important, and someone's got to do it. So we'll assume, again, Merit Health average median salary for a family practice PA of $138,000 a year. Same starting age, 26. Same thing, invest 20% of income. Where do you land? Believe it or not, by age 50, they have $2 million invested. They are a multimillionaire. And by the way, that's their investment portfolio. That doesn't count their house, their car, all the other stuff, right? So they're multimillionaires by age 50, even as a PA, earning in a lower paying arena. Now let's look at the family practice physician. Their income is going to be $300,000 a year. And while they start later than the PA, they don't start as late because their training duration is shorter. So we'll assume it's 30. What happens when the family practice physician invests 20% of that income? At age 50, they land at $2.9 million. Now we see a spread of about $1 million between the two. But again, financial independence depends upon replacing your lifestyle. And while most family practice physicians don't have a lavish lifestyle classically, right? That's not who we think of in that arena. They still probably spend more on an annual basis than the family practice PA. Now, again, I'm all about income maximization. So what happens if you're a locums PA practicing in family med? It's harder to find salary data, but from what I could find, a reasonable conservative assumption would be somewhere around $158,000. Now, this isn't typical locums money, right? We've even interviewed PAs earning $300,000 a year plus with locums contracts. So it's still family medicine money, okay? This is not the most you could ever earn doing locums work, but it's still good money. It's more than the W-2 position in family practice. So now we're earning $158,000 per year as a PA, same starting age of 26, same 20% of gross income invested. Where do we land? $2.3 million at age 50. So you see, we've actually shrunk that gap even further. And again, the gap between the two is now $600,000. Very similar to that gap that we were able to create between the dermatologist and the strategic dermatology PA. All this to say, this simple math shows not only do you deserve a seat at the wealth building table, you have the absolute ability to become a multimillionaire long before retirement age. And not only can you build wealth, you should in fact be building wealth. Because recall that if you're using standard withdrawal rates and the classic safe scenario for retirement, you having $1 million invested when you go to retire generates $40,000 a year for you to live off of. So yes, you, the PA, you need to become a multimillionaire. It's actually not an aspirational thing for you to become a millionaire. It is a straight up requirement. So as you sit down and you ask yourself, like, is this for me? Do I have a seat at this conversation? Am I reasonable to be talking about building wealth as a PA when I don't have the $500,000 income? I don't make $700,000 a year. The answer is yes, absolutely. You can, you should, you need to. And as a community of PAs, we need to normalize these conversations. Talking about earning more, building assets, creating wealth, these need to be normal conversations in your circle. And the more of us as PAs that start to engage in this world, the faster this ripple effect will spread, and we'll see more and more PAs feeling empowered to have these conversations. If you want to be one of the first people to know when the PA Millionaire Path goes live, make sure that you add yourself to the waitlist. We have over 500 PAs already waiting for the day that that book drops. So if you want first access plus some launch bonuses, we'll put the link below. Make sure you get in, add yourself to the waitlist so you don't miss it.